So the first thing is a warning here that these slides are what some in the US call a dog's breakfast, which means didn't have a lot of time, so I just pulled things from different places and threw them together. So not being presumptuous saying we want them, but I just want to, this is a one-time show because they are really homemade. With that in mind, I was born with what they call the ocean gene, which is you can't go past a body of water without jumping in or diving in or something. And the nature nurture thing kicked in because I grew up in the 60s, like some of the people I think on here. And that was a time of all these iconic pieces, including Tekdike being one of over 70 underwater habitats, believe it or not, over 70. And now there's one, maybe two in the world with Fabien Cousteau trying to do another one. So I always loved the oceans. I then had a 35-year career in finance, during which I cycled through private client and fixed income and securitization and asset management, venture, et cetera. So those two things came together to have this ocean investing platform called Investable Oceans. So yeah, why did we start it? Why have a platform? One is I was doing a lot of introducing of folks, and it seemed clear there were market-based opportunities across all the sectors that we call the blue economy. Some people have different definitions. They're across all asset classes, equities, debt, and alternatives. And that's what I'm going to try and give you a little sense of today, a little bit of a helicopter view of that. And then the other observation was that the companies and investors were very widely, the structure of the investment markets are very different. And so the idea was, if there's no centralized location to learn about this, why don't we do that? So that's the idea of the platform, is to bring together opportunities and investors. And the core premise being, while philanthropy, NGOs, et cetera, are all playing vital roles, why not have more capital against the ocean? It's not a replacement for those catalytic pieces, but it's more capital. So this is something I often use to just get the very basics of. And if you think about philanthropy on the left edge of, and you could put grants or non-recourse loans, things like that, in the same category, but that's where you don't expect a return at all for your money, just responsible stewardship. And over to the right is where we're focused, which is at market investments. And that's going into it because there's no guarantees in life about your returns. And then in the middle is this whole area that you could call impact or social components or public-private. And so much of what goes on in the ocean is about that. And the reason I show people this slide is my experience was, especially when you're working with foundations and high net worth, if you start all the way on the right, people will focus, they'll understand what you're saying. If you start drifting towards the left, they'll still be interested, but it becomes a different thing. It has a philanthropic component or concessionary impact. And so what we're focused on is that slice to the right, if you will. And again, they're all critical. This is just a screenshot of our homepage. We put a big blue arrow so you can see it into what our mission statement is. And the one thing I'd say about our site, in addition, is the old Cousteau chestnut about you preserve what you love. We started by putting articles and research pieces like WRI, IPCC, IUCN, et cetera. We have over 700 pieces of research, but then we expanded to books, films, podcasts, and a couple of more things coming because different people experience the oceans different ways, and we wanted to give them different ways to learn. Enough about investable oceans. What I wanted to do is just take the classic asset allocation wheel and put an ocean lens on it. So this, you may recognize this, basically a lot of allocations for the capital markets are, for individuals, as an example, 60% equities, 40% fixed income, something like that for your investment funds. So most of private equity, which is the PE, and the venture capital, which is the VC, many of those are equity related or have directly equity or have equity-like characteristics. So I just grouped those together. And what I wanted to do is just take you through a little bit of each of those to give you a taste of the overall landscape as we're experiencing it. Those yellow arrows are sort of directionally telling you that if you're dealing with smaller pieces of money like private equity and VC, you can often head more towards a direct issue in the middle. And it's sort of a corollary of impact investing, if you will. Whereas if you do equities, as we'll see in a minute, a lot of it is not directly on the point of a specific issue. There aren't huge amounts of companies that have ocean in their name, but still you can have a bigger impact, as is indicated by going out towards the larger end of the the larger end of the circle. So those are the basic asset classes. And what I wanted to do is just take you through a couple of them. And let's start with equities. So we are starting to get some public equity investments now. And keep in mind that the people who generate these funds and products, et cetera, they do so that with customer interest in mind. So you won't see a lot of things getting generated publicly that fail because they go through an iteration of processes to get to the point where they're ready to be launched, and they sort of know they're going to work by the time they launch them. So I did it left to right in this case, of different kinds of public equity vehicles, starting with the ones on the left that are sort of more bespoke and more active. So an example would be the Credit Suisse fund that came out in partnership with Rockefeller Capital Management. That's an example of active management, which is really more towards higher end or higher understanding clients, whether they're high net worth foundations or institutions. In the middle, I put ones that are addressing a broader market. ETFs by definition do that, and BNP just launched one, as you may know, and I think there's more coming. U.S. citizens can't buy, well, they can technically buy the Paribas piece, but the tax implications are such that you wouldn't do it. Stance Capital below that is a very responsible equity manager when it comes to carbon. But again, that's a mutual fund. So I put that kind of that middle group of your broadening out the access. And then to the right, what you're starting to see with an example like New Day Capital is, I call this Betterment meets ESG. So they have 6 strategies where you can put it on your app. You can invest $100 in ocean health, or there are other ones like animal rights, et cetera. But there's 6 strategies, and you can put $100 in. So that's a continuum, and that's an example of how public equities are starting to find their way into this space. So one notable thing about this is that these are, in a sense, broader topics. Yes, they're called ocean things, but if you dig down to the strategies, a lot of them are heavily climate focused. And that's due to a lot of things. One is the investable universe of equities is larger if you think about in terms of climate, but also there's a growing recognition and acknowledgement of the linkage between ocean and climate as systems, starting with the IPCC cryosphere report a couple of years ago, but now growing in terms of a more public awareness of the critical role that the oceans play as solution providers, not just things that have to be fixed, if you will. So you'll notice, because of all this climate piece, why would we focus on this aspect of it? And basically, when you think about all the oceans issues, they're all important. But if you look at that line underneath there of what comes out of carbon, and within that, greenhouse gas emissions are really, away from plastics are just such a huge part of it's a critical part of the mix. So when we're thinking about a site, we said we can do privates and venture and things like that. But in the end, there are these huge amounts of money. They're in the public markets where people doing things can make a big difference in terms of where they allocate their funds. You may have seen that Duke and the Stockholm Resilience Center recently did a thing called the Oceans 100. Out of the Oceans 100, about 50 of those are fossil fuel companies. And by the way, like probably 18 or 19 out of the top 20 are fossil companies. So in terms of the ocean action and ocean actors, clearly GHG is important. And just for fun, since we have some financial people here, we all think about models. If you have a 5-year track record, that's interesting. 10-year, 20 years, amazing. Post-World War II is forever. So the climate record is actually 800,000 years. And next time you're in a barroom discussion about why it is, these are all publicly available data sets taken from 3 primary ice cores in Antarctica and up north. And this is 800,000 years. On the top is carbon dioxide, the thing we all know, parts per million. And the bottom of our Antarctica temperatures. And if you overlay those, you see the punchline is if you get greenhouse gas wrong, you have enormous headwinds in anything else you're trying to do in the oceans. And by the way, that green X that's popping up on the right is where we are today in parts per million. So that's just a little bit of encapsulation of some of the things going on in equities. I think you'll see more. I think you'll see more products. The interest is growing. And again, I think part of it is the enormous momentum with climate is, in a sense, pulling oceans with it. So flipping to bonds, which is where I initially grew up in structured finance, we decided to do this. We were partnering with DLA Piper to do this blue bonds review. And the reason we're doing it is Until recently, if someone said, what's a blue bond? I'm confused. The basic bifurcation was there's some that are like fit for nature swaps, and there are others that are more like small island developing nations that are issuing them against with IFC and World Bank, et cetera. But really the game changed in the fourth quarter of last year when Bank of China did $1 billion bond. And now you have Thai Union doing a sustainability linked loan. So you're really starting to see momentum of actual players coming into this. Not the others were players, but really scaling up. And having been around when securitization scaled up, it feels very familiar in terms of the reach. So what we did was, Pierre was actually a previous presenter here, but DLA Piper wrote a great piece on blue bonds. So we wanted to get sort of everybody represented. London Stock Exchange cares a lot about this topic. Angelique is actually manages the trust that did the blue bond for the Seychelles, and Jen Price Calvert was the lead investor. So the idea was, if you give us an hour, we'll give you a pretty thorough review of blue bonds, and then you can have your own views. First of all, you'll know when someone says, what do you think of blue bonds? You'll know different kinds, but also it does feel like they are becoming more central. In fact, that asset allocation wheel is going to fill that piece out. So it's not a bad investment, I think, to spend a little more time understanding them. So that's bonds. Switching to private equity, and again, remember within alternatives, there's lots of ways to do the definition, but one is private equities, which are generally larger funds, larger investments, and venture, which is kind of startups. I'm sorry if I'm going over things that people know, but the private equity market is one that I think of as an evolution. The first point, there are already some great funds already out there, and many of those folks belong to Paul's various initiatives, one way or another. So it's a great instinct to share and nurture and grow all those. Then they're generally smaller size in the broader market, and that's back to this issue of, a lot of the ocean activities are embedded in large CPG companies like the Coca-Colas of the world, or transportation companies, or chemical companies. So because of all that embedding, if you look for specific things that are labeled ocean opportunities, you generally end up earlier in the life cycles of the companies and with smaller fund size. The other thing, if you look at the funds that are out there, and again, I don't pretend to be expert in all of them, but a lot of them focus in some way. And that's because if you look at how technical these topics get, how quickly, then it's really hard to say we're going to cover the whole ocean front. We do it because we're more of a matching platform and we don't hold ourselves out to be experts in everything. But if you do Internet of Things or insect protein or drones or et cetera, it's really hard to be expert in all of those. One topic that a previous speaker here covered is about the size of funds and the length of track records. Those are things that characteristically in the US anyway, are things that, some of the pools of money that are very big want to see longer track records and bigger size. And that's why they go for these really huge funds that the Blackstones and the Goldman Sachses put out. But I think you're going to see more of that. Larger funds in the ocean space. And I think the bottom is going to be one of the keys there, is people are being more expansive in defining oceans now. So I think you're going to see, you're already seeing it now, but you'll see more and more funds, kind of like not like the CS fund, that will talk about broader engagement or solutions or ESG or sustainability. And you'll end up in a sense with ocean embedded in that, but that will still be meaningful capital going towards the ocean. So it's very important. So that's a little bit on the private equity structure. This I just grabbed from a previous presentation, and this is something where Paul is extremely involved with the whole innovation network that's out there. And just the basic points, it's amazing how many of these groups are out there. I think the answer now is probably over 200. Two of them just started last week alone. San Diego just launched one. University of North Carolina is going to launch one. But if you think about it, almost every university will have some version of an incubator and accelerator. So there's lots and lots of them. They're pretty hard to identify exactly what they are, because what they do in terms of their various elements overlap. And some of them do that one thing, some of them do 5 things. So it's a little bit hard to categorize them. But the facts are, to the second to last point, they're active, they're growing, and they're raising significant money. And there's some great initiatives to pull them closer together. And that, I think, is one of the exciting elements to the ocean decade, because it really gets at that issue, especially if you add in things like the hubs and clusters. It's really about how do you take these companies and help them get through not just one valley of death, but multiple valleys of death and become large companies so they can go into the indexes that we're talking about. So that is a little bit on the private equity and venture side. So I thought rather than focus too much on investable oceans, I just give you a sense of what we're seeing around that proverbial asset allocation wheel. I was going to speak a little about ESG, but I think you're going to cover that next. It's an exciting emerging idea, but it's got a long way to go. Even core ESG, still has a lot of things that it's grappling with itself. So that'll be part of a later conversation. So I would stop here, but what I would say is that what Paul is doing with bringing all of us together repeatedly, and even if we're all not there on a certain day or a certain time, it's I think it's really valuable because the communication piece, the more we think in terms of additionality, to borrow the VC term, where we're doing things that are new and expansive as opposed to multiple people doing the exact same thing, and also radical collaboration, to borrow a phrase from Lonely Whale, to bring us together to think about ways to grow the pie, that asset allocation pie, for everybody to the benefit of the oceans. So I'm going to stop there, and I'm happy to have that be part of a additional conversation, or happy to move on to the next topic. But those are the thoughts that I'd like to share.
Thanks so much, Ted. I mean, that was really a great sort of state-of-the-art capture and bringing your experience and perspectives on this. I'm going to get out of the way here and just open the floor up for people to jump in and have a conversation with you about this overall scope and what's going on, and particularly to evolve the discussion into, on your very last point then, about how we can be most helpful and supportive from what the World Ocean Council is and does. But let's just open it up for thoughts and comments with what Ted has outlined and so completely sort of comprehensively here for us.
I should also add that it's a U.S. centric view in a sense, right? Because it's hard to get out of your geography with all the regulatory differences and the framework differences and the governmental differences, but try our best not to be parochial.
So thoughts or comments from those on the call?
Yeah, hi Ted. Listen, thanks very much for doing that, especially when you're traveling to see a fantastic graduation. I wish you and your family all great fun with all that.
Thank
you. Listen, I think that was super helpful. I agree that us meeting together as a group, and there are various groups, and some people can make it, is really important, and just sharing information. Just today, I was hearing about an initiative on an insurance and warranty fund being set up for ocean projects, principally ocean energy projects. There's a report being pulled together at the instigation of the EU. Again, that will help potentially financial institutions get involved with projects, and these are all initiatives that we need to share in this group, I think. So it's great to hear about blue bonds. I have to say, personally, I'm working at a lower end of the market, but hopefully helping to build companies that will, in due course, get big enough to attract that kind of bond investment. But it's really, really good to hear.
Yeah. So my name is Thor Holstedt, and I'm with Neptune, which is a private equity fund in aquaculture. And what's really fascinating for me is that there are so many different ocean-related investment strategies that you don't really think about. I mean, at least talking for myself, I'm so deep into the core of the strategy that I have on fish farming, basically. But I think one of the things that this forum can bring to me at least, is how to better understand how Neptune strategy fit into the bigger ocean picture, and how there potentially could be synergies. So I see this very much as a way to expand my understanding about the ocean from an investor's point of view, and how I can better understand the other aspects of ocean-related investment strategies. So I'm looking forward to being a part of this forum.
Thanks, Tor. It's really good to have you here. And I think as we get into, as we move forward, it'd be really good to then focus on some of the specific sectors which we haven't done so far, and really bring out some of the specifics of for example, aquaculture and fish farming as part of connecting sectoral views with, as you say, the broader context.
There is one area, Ted, and everybody else on the call, I kind of have come across being mentioned in connection with blue economy just a couple of times in the last couple of weeks, and that's data, ocean data. And I've had some conversations about that from two perspectives. One is on land and in the conventional, if I can put it that way, economy, i.e. not the blue economy, the value of data and the investability of data is actually very well understood. And there are some very big funds who when you go to them with something that ends with the words "as a service," will rub their hands with glee and want to invest willingly. And actually, there is a huge need for an awful lot more data about our oceans. And it seems to me an area where we as a group and financial institutions, bigger financial institutions, could potentially coalesce if we can demonstrate real markets. And I believe there are real markets. And just today I was talking to a data specialist who also deals with smart cities, and he's looking very closely at those smart cities, those big world cities that have ocean fronts, and they're at the forefront of smart cities. But when you get to the beach, the city starts getting stupid because there's nothing out in the ocean. They don't know what's under the surface, just a few feet out from the ocean. They don't know what's there. They don't know temperature. They don't know changes in temperature. They don't know what livestock is there. They just don't know. And there are some really interesting developments there. And just as you're talking about bonds and blue bonds and potentially things that people can coalesce around, I do wonder whether that's the potential area of interest to people. Possibly going in a different direction with the discussion, Paul, which I do tend to do, and I apologize for that. But yeah, I just thought I'd mention
that. That's fine. Any thoughts on that in particular, the data and the city side? And I think I think we're open to having a bit of a wide-ranging discussion here with the broad sort of palette that Ted has painted for us, and really, as I say, thinking about how we can use this forum and this group to be most of value to all of you and to our sort of common interest in advancing investment in the blue economy.
Hi, just a couple of comments on Ted's speech. Ted, congrats, that was a great speech. Really like it, and thanks for sharing. Just to comment on what you've mentioned, I was kind of surprised on your focus on non-impact investing. As far as we are a venture builder platform, and we are mostly focused on impact investing, and we are seeing from both institutional and private investors a growing demand on, of course, results, yield, so no philanthropy, but willing to, let's say, accept 8 to 12% return if there is a clear measurable impact. So that's something that surprised me in your presentation. And then on the other hand, as venture builder, we are mostly focused in ocean restoration technologies and science initiatives for profit. And we are seeing that, yes, absolutely true, that all different startups we are identifying around carbon and climate change. But we are also seeing, and that would be probably a suggestion or an invitation for the future coming, great technologies and science-driven initiatives with very strong business potential in terms of the ecosystem goods and services being raised, which is around biodiversity offsetting and biodiversity regeneration. And my suggestion or my comment would be that we think that there's the next step after climate change and carbon issues will be biodiversity. And I think that's something that it would be great if the financial community would start focusing on that, as the impact on ocean regeneration and, again, wealth creation is extraordinary.
Yeah. Just, well, thank you for that. One, I probably spoke imprecisely when I did my 3 buckets there. There was no value judgment or lack of observation of other things happening, whether it's philanthropy or concessionary impact. I think all of those are vital. Just the slice that we choose to focus on is the one where you go in thinking at market. So interestingly, to your very point, some things have come up recently where there were really, really worthy initiatives, but it didn't feel like you could, they weren't trying to make the claim that it's, no concession, it's all on top of that. And so we started a new part of the site called Blue Frontiers, and we're putting up things like the Aura initiative that is now gaining a lot of momentum, that was started by Ocean Unite plus AXA, and now they've gotten the Canadian and UK governments, et cetera. We also have the Global Fund for Coral Reefs is there, and even Fabian Cousteau's new venture to build something on the bottom of the ocean. So we're totally believers in what you do. We're just saying that, back to the additionality thing, what we didn't see anybody doing from the pure site perspective is say, let's focus on things where you really think about market. All the things on our site, by the way, you probably know a lot of the companies. They're all looking to make, it's a blue economy trade, to be clear. It's not like, if it's oil and gas, that's fine because you're going to get a market return. We are a blue economy site, but we're trying to narrow our focus because we think there are great folks doing those other slices, but our thought was pulling together the at-market piece.
Thank you.
Thanks, Ted. And as this will come in a bit as well, and when we talk about the other agenda item, the framework development, and where is the interplay between impact investing and non-impact investing, and what kind of framework of metrics and indicators, et cetera, are valuable, and does that cut across all all sort of scales of and sorts of investment. Any other feedback or thoughts for Ted?
No, I want to comment a little bit on what Andrew brought up on data. And I think that's tremendously relevant for what I'm doing as well. My feeling generally is there is no lack of data, but there is a real lack of mining the data and get something actionable out of the data. So we have a lot of focus on understanding the potential of extracting actionable, timely information from that data. And we actually think that could have a significant impact and productivity in aquaculture. You have millions and tens of millions of individuals, fish swimming around, and it's incredibly difficult to identify change in behavior and being able to be proactive as opposed to reactive, from anything from biological events to to environmental events to just feeding and optimizing feeding strategies. So applying artificial intelligence as an example, machine learning to aquaculture is something that is of high interest for us.
Yeah, if I could comment on that, in terms of there being a lot of data out there, I think in terms of a real big picture, and in comparison to, again, the conventional economy, for want of a better phrase, actually the amount of data about the ocean, all aspects of the ocean, is minuscule. And whilst it's rich in certain specific locations, because there are installations in certain locations, and it's perhaps rich in certain jurisdictions, like the North Sea, which is very busy, for example. There are huge areas where there is very, very little data around. I got an interesting stat in these discussions that something like 95% of all ocean data is still collected by analog centers on an RS-232 bus. I have no idea what that means, I hasten to say, but apparently it means it's like totally archaic, but that's how we're getting it all. And the other thing that happens in terms of getting data, if you think about it, is ships are hired or bought and then leased to scientists who go out to certain areas, sometimes in great discomfort, for 9 months at a time away from their families with specific missions. They get specific bits of data, and then they go back, and then they tend to keep them. And then 2 years later, there's a paper comes out about it. It's actually all a little bit disorganized. And, I think there are moves to make it work better. And, the interesting thing for me is the ability to bring in big investors potentially. In the UK, there are city deals going on, for example. There are similar things going on in places like Valencia and places like that, where there's beautiful cities with fantastic data availability in the city itself. It's got an ocean front, but immediately, you step up to your ankles in the ocean. The amount of data that's available for the environment you are in is minuscule. And yet it could be so valuable for that city to have data about what's out there. It could be valuable in many ways in terms of what's coming at them for weather, what the patterns are, but also the health of the ocean, and all kinds of leisure uses and the ability to use that area. And what I would love to see is gradually dragging investors, serious investors with big money, into the ocean economy without them really realizing they're coming into the ocean economy. And it's almost a stealth approach, if you will. And I do think potentially data is a big hook for that, So I just would make those.
Thanks, Andrew. A couple of thoughts on this. From my perspective, the parsing out the sort of the data, the ocean data. And we've had quite a bit on this over the years at the Sustainable Ocean Summit and through other efforts at the World Ocean Council on big ocean data and the digital ocean. And for us, a couple of thoughts is that looking at the data in maybe three big categories. One is the ambient environmental data of ocean and weather and climate, in the sense of what's the status and what are the changes and trends in salinity, oceanographic parameters, environmental pollution levels, etc. And secondly is the data, and this is more the Internet of Things kind of data, on company activities and operations. And Tor was mentioning fish farm productivity, fish feed ratios, etc. And for vessels, this whole maritime digitalization movement in terms of fuel use and efficiency and CO2 emissions, etc. And thirdly, for this group, whether then there's an important, well, I would imagine there's an important need for the financial data in terms of the investments in ocean enterprises, getting into the kind of the impact side, more on a financial value and impact, are investments either pure market or impact investing, what kind of results are being achieved there, and value for investment and change for investment. And then just as an important side note, in terms of one of the core programs at the World Ocean Council, that what some of you may have heard about, what we call the Smart Ocean, Smart Industries program, really working to harness the 80 to 90,000 merchant vessels, 3 to 4 million fishing boats, the tens of thousands of platforms of all sorts, to be hosting or deploying instrumentation to gather data. And then also there's the and there are programs that exist, but what we've been working to do and have been asked to do very early on, 10 years ago with the start of the WOC, was to try and create a more comprehensive engaging of industry to participate in data collecting and sharing. That really, people were saying, we need someone to broker the relationship between us as the owner of a bunch of vessels or platforms. We'd like to participate in this, but we need someone to help us talk to the scientists and the technology providers to really sort out that relationship to engage over the longer term. And as part of that, also sharing data that exists in the filing cabinets already for the many companies that have those, particularly fixed installations, from the EIAs, the permit studies, et cetera. It's not commercially valuable data anymore. Scientists would love to have it in the public database, but companies aren't comfortable just kind of putting it out. And so creating a system and a structure that facilitates that. And some leading companies like Fugro, which has been a real leader in that, particularly with seabed data. So there's all of that. And then lastly, I'll say that we are, over the last year, we've had quite a few of the new generation of the microsatellite companies start coming to WOC, and also those that are building this new generation of very small floats sensors that could be deployed in the thousands. And so both of these, one of the key interests here, and why I bring it up to this group, one of the key interests here from both of those subsectors, sort of the satellite and the in situ monitoring, is verifying both the ambient conditions, but also then the impact or lack of impact of those economic activities on the marine environment as a support to responsible investing. And so the technology, the third-party objective data from satellite or in situ monitoring as a support to all of you and your investments to say, yes, we've got this independent data that's saying, here's what's going on with regard to this aquaculture facility, with this shipping activity as vessels pass through a protected area, etc. So a lot of rich developments there, Andrew and Ignacio and Ted, that really can provide all sorts of data to support the investment community.
If I may, just listening to some of the comments, Ignacio's comment, a question to Ted on the focus, one of the focuses, or the focus of your firm, Ted, on market in those 3 boxes: the market opportunities, market returns. I think my observation, and of course, we're market, not impact, and we're smaller scale. So I have that in common, I think, with Andrew, if I understood correctly. But the financial institution, those entrusted with running financial institutions, they're dealing with the monies of others. So one avenue to move away from market towards impact, and you were saying, Ignacio, if I understood correctly, you're already seeing some of that, is diversification in their portfolios, in their asset mix. If they may move to impact because of but there have to be characteristics which provide them some diversification benefits other than the return benefit in moving to impact. So that could be levels of political risk assurances received from governments, depending on the opportunity or other things, because otherwise they'll have difficulty. I'm talking about institutional funds moving to impact. Government funds, the printing of money, the era that we're in right now, that's a different story. But so I'll just leave it at that as an observation. And then in terms of Andrew, I think your comment on data, you know, the data collection and stuff like that, that's where printed money actually may have a benefit. You were using the example, I've got the right players that I was listening to, of cities, you know, smart cities or world leading cities that don't have the data just at their waterfront or beyond their waterfront. So that may be a play where the printed money may want that data. I think Paul actually alluded to a couple of examples, you know, where the printed money legitimately for policy purposes might want that data. Because we have to remember, and the last thing I'm going to say is, I think all of us on this call are situated on the land. I don't know if anyone's on a vessel right now, on a sea. So we're all on the land, and so there are no votes. There are no votes in the ocean. So to get the printed money into the ocean, you're moved by stealth. You're wishful. Your dream of stealth involvement. I think the institutions may follow a framework that the printed money, that government public money, our money in essence, you know, is being spent for. And that may be the rationale. I mean, part of the rationale for getting at that data would be that the printed money is used to hire, to coalesce, to bring it together with a view to attracting, if not by stealth, to making it more attractive once the understanding of the investment opportunities, once they are better understood by institutional funds, for them to come in. So the long and the short of what I've just said, if you agree or disagree with what I've said, is it's not going to happen overnight. You know, we've all become accustomed to, you know, oh, I've just heard a beep, you know, I'm going to respond to this. That's great if we're using it properly, but that's not the way these problems are going to be solved when you're involving capital. It's going to take focus and time and dedication. But I can see the point I wanted to really make is the printed money may be part of the framework of drawing in the institutional money, because it'll be very difficult for fiduciaries, those who are handling those institutional funds, to move away from market, which I suspect, my words, not yours, Ted, is why your firm's focused where you're focused, and we are as well. So I'll leave it at that. I'm optimistic and I'm here, but
well, and I bet that you also, like us, you probably spend a lot of time on things in terms of your personal interests and efforts that aren't directly market, and we volunteer for all kinds of things to push these initiatives. So again, I believe fully in the full range of things, and I wish, I look at the EU, the things they're doing, I wish the US would pep up a little bit and do more of some of the Blue Invest type things. But all of those different sleeves, I think, are critical. I think they all play a role.
Thanks, Jacques, for that input, and everyone for this discussion. If I could if we could segue a few minutes into while we're having this broad sort of discussion, which really, you know, Ted's overview really set the stage for. You know, all of you here have been really putting in the time to participate in the roundtable, and we've had, you know, sessions where we've had more and over time, and I just wanted to have a few minutes to think about where we should be going with the roundtable. We'll get into the specific, the task team and the ESG impact framework work there. Was really, as you know, the real key focused sort of project level effort. But I've had some people, indicate they're not that interested in a wide ranging discussion. In general, show value in having a broader network and interaction. And many of you, and as Ted did today at the beginning, have articulated the value of us having this sort of open roundtable and forum. But I just really want everyone's, very busy, and I'm very grateful for the time and effort and interest you all have here. But I just want to make sure that we're doing the right things with this, with the WOC, with this roundtable or the broader investment platform efforts to provide value to you and others. And so, I've got no ego about this, and I've got no, agenda. I want to do what's best for the ocean investment community, broadly speaking. So any thoughts on what you would maybe, and actually we've been doing this now a year, any thoughts on where we should be transitioning to, or what would be most valuable to you all and the broader, those that are on the mailing list and not here, and the broader community that's not on the mailing list yet, to really to make this useful. I've got a lot of people who I could reach out to from the investment community, particularly on the bank and equity side, to really, if we really wanted to make this a broader, sort of throw the net more broadly, we could do that through, a lot of the contacts we have in our database, but really wanted to get a sense of the value here and what we should and could be doing better or different.
Paul, I was just wondering what might have come out of the survey that came out and what the responses were there. Did people make comments about where they wanted to focus? And
yeah. Thanks, Michael. And good to see you. Thanks for getting up early again. I haven't really analyzed. There's been various suggestions. So good point. Let's go back to that. I would say kind of indicative of the the situation. Those like yourself and others that have responded, and so we haven't got a huge number of responses. So whether that's indicative of that we're not, hitting the mark in terms of what we are providing, but let's go back to that and have a look at those, and I can prepare that synthesis in the run up to the next meeting. So thanks for the reminder on that.
My view, as I must say, is that I believe that there's a need for mobilizing capital into the blue economy. And as I've said before, I'm closer to the impact investing than the pure investment, even through the fund we are now setting up. But I think there's a need to to attract capital and mobilize capital into the, let's say, marine sustainable economy, let's call it that way. And the idea of generating this community and bringing in as many players as possible and generating a space of discussion and sharing and networking is very interesting. And it's one of the great assets that the World Ocean Council can lead as a global player on blue economy. So I would suggest that based on that goal, the roundtable is an interesting start. It's an interesting way of starting this process, but maybe we should start thinking about moving into a next stage of setting up this network and this space of this community to mobilize the world of capital and generate this community feeling.
And what, just to follow up on that, Ignacio, when you say to the next phase or to move from where we are now, what are you thinking?
Yeah, I would be thinking something more closer to not so much, let's say, monthly meetings on a roundtable for open discussion, because time is a very scarce resource. Something less intensive, but more, let's say, more open and more working and more networking as well, around organizing an event like the Bluefin you were thinking about, and then around this same concept, then set up probably 3 meetings a year, 4 meetings a year with more content and discussion. And then from there you can get, and then it would probably be easier to approach the different issues of the financing community in the blue economy might be facing.
Mm-hmm. Okay. Any thoughts on that suggestion? And so really a longer, more structured event type effort several times per year as a way to get into broaden the outreach and involvement and get into more detail on particular subjects?
Yeah, well, maybe for me, the value here is getting to know what people really think. I was in a conversation last week with a guy from one of the big majors, I won't mention which one, from the venture arm, who was speaking to a very small group in a meeting not dissimilar to this, and he was going to share his views on this venture arm's outlook. And he said to us at the beginning, do you want to hear from me personally, or do you want to hear from mentioning his organization? And we said, we want to hear from you personally. And we had a completely different conversation. We got to hear direction of travel. We got to hear about the arguments within that organization, about how they are approaching blue economy issues, and about the things that might help move the dial. Now, this is an entirely selfish view, I used to say, in terms of what I see as being one of the potential uses of this group. But if we were able to, I think we to create a safe harbor, forgive the pun, where people like that could come and say, look, this is the public pronouncements. This is what everybody's saying. But listen, I'm telling you, I'm inside, I'm in the meetings, and I'm telling you, these are the three most important things that we need to solve. Can you help us with this? You know, and where do we go for this, and how do we help? You know, for me, that is an area of huge value. I guess one of the problems with that is there's probably not much money in it, and I mean that in the widest. You know, there's not much kudos. There's not much organizational glory in that kind of thing, because you tend to manage to do things and help things and nudge things, and nobody ever remembers who did that or why it happened. But I think this group is fascinating because of its diversity and the willingness of people to share openly. We've had some fantastic presentations. Ted's this time we've had some great from various people, you know, the Credit Suisse and BNP Paribas and lots of people. And I think that's been hugely interesting and hugely valuable. So I would certainly be encouraging of a future that includes as many of those. Look, come and talk to us, stays within the group, you know, no names, no pack drill, and all we're trying to do is help this whole blue economy thing. That's what we're trying to do here. That has huge value, I think.
Thanks, Andrew. Any other thoughts on this? And not to belabor the point, but certainly, you know, happy to receive input, you know, as we move forward, and you know, working with all of you to set the agenda and maybe identify the speakers and participants moving forward as a part of building this. And you know, yeah. So we'll have a look at those surveys and you know, continue to evolve this, and certainly the work with Alex in terms of the WOC 2.0 consideration of what we do and how we do it, and the business model this can be a big part of that focus as well.
So Paul, yes, sir.
Go ahead, CG. I think you were going to jump in, and then Michael.
Yeah. Sorry, Michael. Thank you. Yeah. So I think, you know, maybe I haven't been too outspoken here in the last year, but I think this is, as been said, extremely valuable. And this group that is really diverse is very rewarding, I think, and it continues to be one of the things I'm thinking about when I'm listening to this is that there seems to be a group of people who are joining these calls, you know, every month, and then there are people who are joining less frequently, and so one thing that comes to mind is to maybe even more carefully try to sort of pick the brains of all the great minds that are, for instance, on this call, and see what interests are represented here. Like you said, Andrew, having a possibility to speak freely and to really know, not what the affiliation, believes, but personal reflections and those kind of things. If we could get more of those, and maybe a bit more outspoken, this is what I see here, and this is where I see that this could go, and maybe Paul's some kind of, I know that was probably, to my assumption, the purpose of the survey, but if it didn't come out, in 100% people responding there, I think it, this group, or maybe on another call, maybe one topic could really be, so, okay, guys, what do you think is the value here, and what should be sort of extrapolated even more, because it is an opportunity to form this, maybe a bit more concise, if that is what we want. But I think maybe having some kind of topics that are, as most people here agree on, what the purpose is and the outcome, might be one idea to push that a little bit and to see, so, okay, what do you want, and what do you see, where do you see this going in?
Yeah. And you had some really detailed feedback, CJ, that we want to pick up, feedback through the survey. So let's, we'll be coming back to that, and
happy to,
as we move forward. Yeah. Thanks for that. Michael, you wanted to jump in? And
just to really pick up on Andrew's point a little bit, I think there's value in just a collective of people really interested in blue economy investing across different sectors and different parts of the world, and so it's very interesting, and one can dive deep or get a macro picture like Ted's provided this morning, which has been really interesting. And I think that has value in itself, just to connect and reconnect and come in and out and build that being, objective and output focused could be very challenging because of the breadth of the group. And, I think impact investors at the small end versus equity and ETF investors at the other end, there's very little connection in practical terms in delivering outcomes and outputs and all that kind of thing. And similarly across the sectors, needless to say, the geography is all very different. It's very difficult for us to invest, say, in Canada in some sectors, for example, sitting here in Sydney. So there's certainly this difficulty of the disconnect between those things, and maybe there is some value of subgroups and getting together either across, impact investors just getting together at the small end and talking, or in the aquaculture area. So there might be a group of people who are really interested in aquaculture and having deep dives in those, and having subgroups. I'm just throwing this out as possible way to get traction of groups, if the group's big enough, if there are enough people interested in, say, aquaculture. But I think there is value, and maybe it's through the bluefin that everyone gets together and there's themes and deeper dives into that, and a broader community of ocean investors. And certainly, what I'm seeing, much more money flowing, much more interest, much more depth. The field is growing, so there's value there. Yeah.
Okay. Well, thanks, Michael, and everyone. I don't want to feel like we're covering again ground that we've covered, but I just wanted to have a bit of a checking in with everyone that really flowed on well from Ted's broad interventions here. Why don't we, and I realize we're already well over the hour, and we've continued to put these as 90-minute events, and happy to revisit that if there's comments on that. But let me then, again, thanks Ted, thanks everyone. Let's have a quick look at the where we're at on the, and I'll share a screen here on the ESG framework. And we have, let's see, so we did, moving here, we did meet last month and got a start on things, really starting to scope things out from amongst the 6 or 8 of us that were able to meet. And we have, I think, about 8 or 10 that have indicated interest in this. And then we had a really initial looking at what's going on here, and I did present information on the a process, potential process sort of outline based on what the GIN, the Global Impact Investing Network, Iris Plus people that identified for me what their process is. And in fact, as I may have mentioned in our last call, and certainly to the task team mentioned, that those folks at that, again, that's the Impact Investing Network, but they were, in my interaction with them, was that, yeah, we'd really love to have an ocean piece that fits into our overall architecture here, but it'll be 2023 before we can get to it. And so if there's a group of investors that are able to start working on this, and WOC is catalyzing that, great. And so we had a look at that process information that came out from them, and then agreed that, and Lena was very active in this, and I may, not to put you on the spot, Lena, but had some thoughts on this as well. And so we have a smaller group that we want to get together to get into a longer discussion on mapping the process of developing the framework and the various components to it, so that we're all on the same page there in terms of what steps we would be going through, and the work and the outputs from those different steps. And so we haven't got that subcommittee able to convene yet. I've had some challenges that kept me away from work a bit the last 6 weeks or so. But just to give you a sense, just to review this, and I was invited to talk at the late last week at the that might have been early this week at the Blue Invest, the World Maritime Day last week session that the Blue Invest platform convened to talk about this whole work. And basically what we're hearing from people is, please do this, that there's a need for this, this ocean focused framework development. And so this is building on a lot of Michael's input that has helped capture things that really set the scope here. I would highlight in the meantime, this EU report that came out that I would really recommend. This has done a lot of the groundwork here on really a very systematic look at what are the criteria out there, and could be an important part of us being able, us as a group, and this effort on the framework moving forward, because it's not the be all end all, but it's really been a very systematic look at things. And the firm that was the lead in that EU project is very interested in getting on a call with me. I would also say that some of the big consulting houses that are in the blue economy space are also very interested in taking their work and developing ESG sort of risk analytics and coming and speaking to our group at one level, and also linking with this framework development. So, and this is, I mean, I think this has been the particularly the group that's been, well, it's PwC that's been, as I think we all know, organizing the Blue Invest process. And so they're very interested in linking more, and they've been bringing WOC and myself into this Blue Invest process, as I say, with the events they've been holding this year and the European Maritime Day workshop last week. So this, I'll just run through these couple of slides, and then and those Lena and Michael that were involved in the initial task team meeting, any thoughts there as we kind of get back on track here and get that group meeting again soon, as well as this subcommittee on process. And so these are some of the key elements. Again, Michael this is a lot of your work in terms of outlining the situation for all of us. And then, yeah, and the materiality piece comes out more and more as I'm talking to different entities and different funds as being a really important part of what they want to understand regarding the ocean and ocean economic activities, and how that relates to the broad understanding of materiality as it's been identified in more general sort of ESG data and frameworks that comes out from some of the data providers. And back to the data point, the financial data from Morningstar and some of the other entities that people are telling me they're now accessing data on ESG and how it relates to some of the maritime sectors and companies, but that it's very broad. And I think the last slide here, yeah, was this. Then it gets into some of the, again, thanks, Michael, was, you know, some of the ways in which to structure the information and the measures. And this sort of data here is where that recent sustainability criteria report coming from that EU project is really the sort of thing that could help us have a baseline set of publicly available and highly researched inputs to this development. So I don't know, Michael, Lena, any thoughts on that you want to share with the group as we got off to that initial start in April, but have had a bit of a hiatus over the last 6 weeks and want to pick back up on this work?
Thank you, Michael. I do think it's, yes, it would be great to schedule something after World Ocean Day. I know everyone's busy with various events and happenings, so perhaps the second half of June would be a good time to schedule a follow-up meeting to advance the work on this particular topic. So I don't know how that fits with your schedule, Paul, or other schedules, but whether it's late June or perhaps first half of July, but sometime after World Ocean Day. Yeah.
Yeah, and certainly the interest here from that smaller group had been to work together frequently, and then and have that subcommittee deeper dive, as I say, into the process work that Lena, you had some really good thoughts on. So the general sense here is that, and that this is needed and valuable, and that it's not happening in a coordinated, comprehensive way otherwise, and we should keep on with this effort and focus here.
I agree with that. That's basically the feedback that I've been getting as well. So I would definitely vote for continuing down this path and then getting to some clarity in the next committee meeting about what that path looks like and the timeline and the outputs look like.
Yeah, great, thank you. Any other thoughts on this?
My one probably continuing thought is that I think it's important to keep an intense focus on who will be the end user of the framework, because as we've seen today, different parts of the investment community have different ways of looking at things, and I think that as an example, just individuals versus institutions, they process things different ways, and the way that institutions, the larger ones, consume their research and inputs is just very, very different than the way others do. So I think as you go deeper into this, I think really keeping an eye on who do we think, and it doesn't have to be one segment, it could be multiple segments, but really test along the way to say, are people really going to engage and use it? Because there's a lot going on right now in this space, and a lot of it is about people going deeper in specific slices. Nobody's done ocean yet, so that there's certainly a newness and importance to that. But I would definitely encourage us to get some real feedback, continuing feedback, because you've done it already, Paul, but continue to do that to ultimately construct something that gets used.
Yeah, and that's one of the main considerations here, to make sure this is value added work that needs to be done. Yeah, and that fits into that broader sort of ecosystem and sets of things going on. And I think with the sorts of people we have on the call here and involved in the task team, you know, that we'll continue to have that checking the world around us to make sure we're working on the right thing and connecting with the right other initiatives. And this came up here with, you know, this point about, you know, making sure we are, you know, what do we need to be engaged with and consistent with and aligned with, and really constantly scanning the horizon and scanning the, you know, the ecosystem to be connecting with that, and also letting people know. And this is why what the Blue Invest platform really wanted us to talk about that, so that we can make sure people are aware that this work is going on. And if there's something bigger and better that's doing this work, then let's, you know, make sure we're not duplicating, or if there's other bits and pieces that are emerging, let's try and integrate and engage with them. So that's what we'll continue to do. If there's no, sorry, go ahead.
Oh, sorry, just wanted to add, I completely agree with Ted. I think you, Ted, so diplomatically put that often in the impact space, solutions get designed that are insufficiently informed by how markets work and how end users actually interface with, whether it's standards or other types of tools and resources. So I think that's really critical. And also, in addition to that, I think there's an opportunity to, rather than create a push mechanism, to create a pull dynamic where the value proposition is driven by the fact that next gen inheritors and those who are customers of banks are coming to them asking for certain products that are good for the oceans, that are good for a number of other outcomes that that next gens care about. And so I think there's an opportunity to provide a solution for an ever increasing dynamic in that space that's driven by a shift in a transfer of wealth to the next generation that fundamentally has different expectations about financial services. So there's an opportunity, if framed appropriately, to be a solution for these institutions in an area that is of increasing interest and where solutions are needed. And so that's one aspect of it that I look forward to delving into more detail with the task force. And Ted, your input will be invaluable in ensuring that we are meeting both, that we're integrating both the supply and demand needs and concerns into a product that can be of value.
Yeah, and I think that focus on the end user and and how they can use it is really important to keep in mind. And great, well, thank you for that discussion. And we can just end up here with this last point. This and one that's not on the screen that I'll mention quickly, but this is then we have been. I think most of you should have been each month receiving also an invite, and I haven't gotten it out yet. Even this is an event tomorrow. The other roundtable that we have, one of the other roundtables we have on the ocean carbon dioxide removal slash restoration slash blue carbon, and we have tomorrow. In particular, the focus then on the blue carbon, and this is something I've been tracking for since it really emerged, I don't know, 15 years or so ago, as an important part of the ocean climate. And Ted, really valuable that you were really linking the ocean climate connections there. That was, you know, so much of what we're seeing going on here. And this blue carbon piece has been a big part of that landscape, but in fact, diving back into it more deeply from the World Ocean Council perspective, you know, what's the business development? What's the investment development here? And in fact, there's not a lot going on. And Steve Crooks at Sylvestrum is one of the best guys to talk about that, having been involved they are the people that really are defining what blue carbon is and how it works. It's really in that other end of the spectrum, Ted, that it's really been the foundations, the NGOs, the governments, working on this, and the actual business and enterprise development and therefore the investment opportunities have been extremely limited. There's a few things starting to emerge, and then linking to the carbon credit market developments. So there's a really it's a really important piece of this broader ocean CDR context, and so this will be the focus of that roundtable tomorrow, which has been really continuing to develop well as a monthly gathering. So that's more of an announcement, and I'll send a quick note around everyone so you've got the link for that from the Ocean Investor Roundtable participants' point of view. The other thing I'll mention, we have the global, it's a mouthful, the Global Blue Economy Innovation Initiatives Network. Many of you would be aware, and this is the where we work to bring together the growing ecosystem. Again, Ted mentioned the incubators, accelerators, challenge competitions, startup hubs, to create connective tissue amongst them, amongst the initiatives, not amongst the startups that they are spawning and recruiting and facilitating, but amongst the initiatives as that continues to grow and really try and coordinate or facilitate at least interaction and synergies and economies of scale. That we've been meeting, it's evolving into a quarterly meeting, which is happening next Monday, which I belatedly realize is a major holiday in the US. And thank you to those that have responded. I've invited a number from the investor side to really then have a panel at that meeting of all of these accelerators, incubators, on what the investors want these entities to know. How can they, as accelerators, incubators, challenge competitions, be most useful and valuable in supporting our common sort of interest and mission of advancing ocean sustainable development, and really helping the initiatives understand from the investment community, if you guys did this, it would be much more valuable than that, or what is the really positive direction and trajectory we would like to see from amongst all of these accelerators and incubators, or what that you would like to see as investors. And so that's also a part of how we're connecting up with the Ocean Investment Platform and Roundtable participants with that innovation community. So that will be on Monday, and I can send more information around to the broader Investor Roundtable mailing list about that as well. And thanks to those of you who have agreed to be a part of that investor panel. Yeah.
Sorry, didn't mean to interrupt.
No, go ahead.
When you talk about working with Birgit and Tool, could you just a little more on that in terms of how that's coming together? Because that sounds like a great combination.
Yeah, and so this, for those of you that aren't familiar, the Ocean Opportunities Lab and Birgit Liuden in Oslo, who we've known for many years and has been involved in various aspects of WOC. So they now, with Tool, the Ocean Opportunities Lab, have a great online platform. And so we at WOC don't have that online system for engaging and providing a space for innovators. And so we're really combining strengths there with our network, particularly with the corporate connections and the investor community to work to use their platform in a strategic partnership, and actually having a preferred preferred level of membership in the Tool platform for those that are affiliated with the World Ocean Council. It's really a work in progress, Ted, that we're figuring out as we go along as Tool gets set up. Yeah, really wanting to use both WC and the Tool platform to help then publicize and engage get people engaged in the various challenge competitions, etc., to really create that convergence of that ecosystem, the innovation ecosystem. So kind of a vague general response, because it is so much a work in progress, but over the next few months, I think more specifics will be emerging very, very soon.
Great, thanks.
Well, thank you all. We're right at the 90-minute mark. I know this is a big time commitment for all of you. Really appreciate your continued interest and involvement here. And Ted, thanks for that overview, and thanks everyone for the input and the discussion. And we will keep moving forward together. And again, don't ever hesitate to let me know what I can be doing to be most supportive for you and most valuable in what we do here at the World Ocean Council. So we'll close off there. Thanks very much.